What up, what up, what up, everybody? Lonnie here with ChartsNLabs. A little upset with myself on my day trading account. I'm still up like over 4 grand on the year, so I'm still doing good from a $400 account. Luckily, I put all that money into Texacoin and locked up most of my profits. I did have a fairly large position that I was trading this week. Monday started out phenomenal. And then I quickly followed that up with a kind of a bad play, which I then went into Tuesday, getting back onto discipline, and I did very well. Hit an absolute killer play, and it was actually so killer that it surprised me that it was up, and I got optimistic, and a little bit of hope trickled in, and it forced me to look to see if it was going to be able to counter my bad play from Monday afternoon. Basically a sort of revenge trade kind of thing. And instead of taking the profit and getting out, locking up that that allocation of money, that funds, and saving my account, I instead, when it went negative, had confirmation bias and doubled down. That basically nuked that small account. So even though it's looking like it was a small loss, it actually hurts really bad. So I'm very, very upset with myself. So I kind of, instead of trying to save the couple $100 out of it, which would have been smart to do as a small account, I let the hope of a possible bounce and recovery play out today and was quickly swept. And so we're not going into the day trading. We're not talking about equities in this video. We're going to talk about crypto because there's a lot going on in all I guess, financial sectors. And crypto, especially, is considered a risk asset and is getting hit the hardest out of all these. You can see there's AMD down. Bitcoin, if we go to the daily chart, and we need to make this fit so we can see it. Let's go year to date. Pretty ugly chart for Bitcoin, Ethereum, almost identical, Solana, almost identical, XRP, again, same picture. And even TXCs is not too far off for being one of the micro caps, kind of, well, not maybe quite a full micro cap, but much smaller cap off the radar play. Is still getting the same effect where it had a similar starting point and then it came down. Not quite as ugly this year. If you look at the last 6 months, they're down 64%. Full 1 year to 1 year up 270%. And you compare that to the OG like Bitcoin, 6 months is down 43%. 1 year to year is down 32%, but they were already established. So what's going on in the crypto world? We're going to talk about this because there's a lot going on between Fed chairs, economic policies, geopolitical tensions, and one of the things that always happens first is the highest risk sectors typically get hit the hardest. So crypto, not only going under regulatory scrutiny as far as the Clarity Act and such, we're also seeing the geopolitics, and people need to get out of their risk assets like crypto and get in a safe or sit cash and wait for the thing to clear. So this is my main watch list of ones that I kind of like: Bitcoin, Ethereum, Solana, XRP, Litecoin, Avalanche, HBAR, Hedera, Chainlink, and then Canton Network and TXC. So if we look at the big theme of the year was from hype to structure, and this is the regulatory issues the Clarity Act is bringing. Regulation, infrastructure, the real world usage, institutional positioning, and liquidity discipline. There's a lot of people who are trading crypto with leverage, and they were winning big time when things were going predictable. And now the volatility is what's going to ruin retail leverage traders. And you can see that that's kind of happening a lot and causing these big over-exaggerated moves is the leverage getting and liquidity getting swept. So Bitcoin and Ethereum are your top two. These are the anchors of the crypto market. Bitcoin has remained the center of gravity for the entire market. ETF flows dominated the price action. When Bitcoin stalled or corrected, everything else compressed. Acted more like macro risk asset than a safe haven. Bitcoin's supposed to be Bitcoin or crypto gold, which would be the safer of all the cryptos. So for crypto investors who are looking at the altcoins and some of the smaller projects, even in the top 20, Bitcoin's supposed to be the safe haven of those. And but we are seeing some institutional adoption and that macro sensitivity still picking up and kind of bolstering those levels. Ethereum has held up better structure than most of the altcoins. Continued transition towards the staking and layer 2 dominance, which is what Ethereum is built for. Price action was muted though, but the network usage stayed strong. So people are still using Ethereum, the other layer 2s, but of course the price is being pushed around because of the institutional and the ETF flow. So this is becoming a core infrastructure piece and not a speculation vehicle. The smart contract and scale chains, these are a little bit more volatile and selective moves. This is Solana and Avalanche. Both showed strong upside sensitivity during the risk periods, but also suffered very sharp pullbacks when liquidity dried up. Markets rewarded the performance, the ecosystem growth, and they punished overcrowded positioning. Again, retail leverage is getting smoked. These are very high beta, liquidity dependent leaders. So when money's flowing and the economy's good, Fed's cutting rates, it's easy to borrow money, these guys are going to do very well. But if that goes away and people start getting risk off, these guys are going to get hurt the hardest and have the sharpest pullbacks. Your payment and settlement coins are waiting for the Clarity Act. We need to know how these are going to be regulated. So XRP and XLM are traded on a more regulatory headline than the on-chain metrics. ETF speculation around XRP became a major talking point, and price remained range-bound for most of the year because the Clarity Act is going to push us one way or the other. Litecoin quietly re-emerged as a rotation and ETF adjacent asset. The ETF for Litecoin came up and sparked a huge rally in Litecoin. Benefited from being simple, decentralized, easy to classify. With the Clarity Act, the biggest thing that cryptocurrencies need is they need to be able to, are they going to be more like a commodity? Are they going to be more like infrastructure play and utilized and have utility? Or are they a payment structure? And that is kind of the big three bugaboos on the Clarity Act and how to define this. And that's going to drastically affect how cryptos are played. Silence that. I'm touching buttons that I'm not supposed to. Sleep. Sure, whatever. Turn off. Whatever. So we got that going. So then infrastructure tokens, these are layer 2s. They'll lag first, lead later. I'm sorry, infrastructure tokens, not layer 2s. My bad for saying tokens. Link has underperformed early, continued to build institutional plumbing, oracles, cross-chain infrastructure, typical behavior, ignored until it's suddenly essential. So, got to, again, the payment, the infrastructure, the commodities are going to all be the first to move. Enterprise first approach for HBAR. Slower price movement, position for regulated adoption rather than retail hype. So HBAR is very much set up for institutional play, and it just hasn't quite happened yet, but that's what that's waiting for. Canton, one of the most important non-retail developments this year, focus on institutional finance, tokenize a real-world asset. This is a big one in the Clarity Act that a lot of people are going to mess up on. When you tokenize a real world asset or a crypto coin is backed by a real world asset, it becomes a security and excuse me, and has to be registered with the SEC. Um, and that's what people um, are messing up. Registering for the SEC is $250,000 to $1 million to get registered properly, and a lot of people are thinking like, oh, I'm just going to make a token for real estate, or oh, I'm just going to make a token for gold, or oh, I'm going to tokenize this, and no, you're not. And the institutions are going to be able to do that because they have the backing and the power to be able to um, be regulatory compliant. They're not going to let average Joes and oh my goodness, sorry. Um, they're not going to be able, they're not going to let average Joes and blows come in and make tokens about everything and take advantage of that. TXC is in a unique position. TXC has not followed the typical altcoin path because it's still establishing its own. Still very new in the game. It's very young. It hasn't even developed a full market liquidity. Still establishing prices and ranges where a lot of these other guys have been trading for a couple years, so they have ranges. There's still a lot of people even learning how to buy and where to buy TXC on the market that are unaware. A lot of passive off-network mining is all that's going on with TXC. So the price action was significantly drawdown, high volatility, thin liquidity amplified this downside. Again, that's what I just talked about. There's no action in the market, so it goes down very quickly. As soon as there is action, it goes up very quickly. It is a very quick rebound. But fundamentally, this is a shift from speculation into utility. The Layer 2 development is underway, community and event-based token strategy. There has been 2 signed downtown digital dollar contracts this year. Mining expansion, targeting to be in the 15 plus terahash range very soon. Focuses on real transaction, low fees, local economies. Narrative, price compressed while infrastructure expanded. This is early stage utility building, which historically looks bad on the charts first, then gets repriced in later if adoption shows up. So this will always look bad on the charts first. You're going to get a lot of FUD. You're going to get a lot of bear talk. But as soon as that utility steps in and is very successful, the chart will reward that, and the price will rapidly catch up to the optics of what's actually going on. So this is what's been pushing everything, the Clarity Act and broader regulatory discussions. This is what's been pressing the cryptos around really hard right now as people are trying to guess what's going to pass and guess what's going to happen and guess the wordage. You're seeing moves back and forth. The listing risk, liquidity available, favored, decentralized, utility driven, compliance friendly projects. This is a big one, that SEC compliance. You cannot tokenize real world assets and do the promising of yield and all that stuff without being a security. So there's a lot of projects who are on the pause list for SEC that have already been red flagged. So the infrastructure and utility is an important one for these crypto projects. This year has felt very hard. There's been a lot of deleveraging. That's people getting out of risk assets. So crypto. Then you go into the tech stocks. If you look at the heavy tech stocks, the AI stuff, the robotic stuff, the chips and everything, those stocks are also getting hit really hard right now because those are considered risk assets. They need easy access to money and capital to expand, and so money leaves them first. This is repricing risk, waiting for proof instead of promises. This wasn't a bull year or a bear year, really. It's been a transition year. I like that comment. One paragraph summary you can reuse. So far this year, crypto has shifted away from the hype and towards structure. Bitcoin and Ethereum remained as the anchors, while smart contract chains moved with the liquidity cycles. Payment coins waited for the regulatory clarity. Infrastructure projects quietly built behind the scenes, and early stage projects like TXC focused on real world utility rather than the price. It's been a year of compression, regulation, and groundwork, not euphoria, not the crazy year of 2021 and 2020 where everything just ran like crazy. So your next phase, what to look for. Going forward, the market will likely reward usage over narratives. The utility is going to be king. What is being used for? Transactions over promises, compliance over chaos, infrastructure over memes. The meme coins, the pump and dumps, are all going to probably go away. And what's going to come out is a lot less crypto projects, but good quality crypto projects. So, one thing to remember is always make sure that you're looking for something that is going to be utility driven or in the framework of what is needed in crypto. And I think I got a good list. Got a good list for it. A little bit of everything to pick from. I'll put this list in the description on this video. And of course, I'm a little bit biased. I really like TXC a lot. This is one of the only ones that I've ever been in this early in, and I can see the vision. And if all things start laying out how they're supposed to be, this is going to be a really exciting year for TXC. And it's always nice to weather the storm and come out on the other side. Because if you look at the 1 year of, I don't have I have to go to this one. Coin market cap. We're going to make these be weekly candles. We're going to get out of that weird wick from the exchanges going weird when Bitmart went crazy. Of course, everybody always is going to look at this and see that this meant the pump and the dump, the run and failure, where this is just establishing. And the cool thing is, it's showing us the levels that it needs to be at, and held that level. We're here at the next level, at the dollar levels where we're trying to get to, and then we're there. It's just giving us the roadmap. People call this the failed path to 16. If you go through these guys and look at all the comments from the negative group, you're gonna see a lot of people comparing this path to 16, and that path was based on sales selling out, and the mining sales have slowed down as the whole geopolitical and macroeconomics of the whole world drastically fell off. And of course, a new project is going to get hit the hardest with that. We could even say that this is the next level up there. And I think we'll even call, what do we want to call this one? We'll call this one. So those are all your levels. I think they line up pretty much with the path to 16 prices, as you can see. And people are going to criticize me for even mentioning the path to 16. That's fine. What it basically does is it kind of puts a value at what the mine sales will be at. And we just have to get those sales to push it. And the mine has to be successful. And then on top of that, utility has to roll out. And you'll see utility projects come out and start utilizing it, and we'll get into the utility in another video and how utility affects a crypto project. This video is mostly just an oversight and look at the crypto world, seeing that everybody's bleeding. They're all kind of going down. You can see it even lines up, and this is what's crazy is when you see silver ran up like crazy, dropped. Gold ran up like crazy, dropped. Oil is climbing up from the abyss, so that's kind of something's going up. But if you go look at the S&P 500, run up, big drop, run up, big drop. It's very much in an indecisive time where people don't know where to put their money, and everything had been at a huge run up. If you look going back into last summer, huge run up, and we just haven't seen any kind of bottom, I guess you can say. And Bitcoin is no exception to this, even though you look and you're like, oh well, it didn't really run up until going into the year, and it's been up and down, but this was a decent run up. All-time highs 126,000 is crazy. And we've wiped all the way back down into this level. You know, could this be a bottom and a reversal? You know, if you look all the way back to 2023, when you had the first little bounce up in consolidation and gave us a little shelf, this lines up right here with this pull down and this wick off of this pullback off the run up. So it's kind of like the first run up to the first run up, and we're looking to see if this lines up with this one, and it's kind of right around this level. So could Bitcoin reverse really hard right here, or is it going to follow this kind of trajectory, these two kind of trajectory, and see if it can get all the way back into here to test levels of support and where buyers are going to step in. You know, we could look all the way at that shelf, and that would be a crazy pullback. But that's a realistic level that this could come all the way back to. Maybe more likely this level. Looking at this little shelf right here, 63,800 could be before we see a reversal. And the craziest part that I see, and I'm, you know, to talk to people like, oh, what do I do? When do I buy? Da da da. They could drop that Clarity Act that, you know, without warning. The Fed could come out and say something. Trump can come out and say something, and it could just completely melt up really fast. It's really volatile times that we are in all markets. So hopefully you're being careful with your money. I'm hoping everybody's making lots of money. But this is the first video in a series. I'm going to really try to get breaking down some of the crypto sector a little bit more, because I have neglected it this year. I've been really focused on that day trading account, which has been taking up most of my time. And I want to get some information out on crypto. And I want to get some more information out on TXC, some of the utility stuff that's coming out. So be ready for this series. This is the overview, and we're going to dive in, and we're going to ride this volatility wave. It is massive, but be cool to see a little bit of an upswing on this guy and get us into some positive momentum for TXC. The cool thing about TXC is being under the radar right now and being that brand new project, it's not getting hammered as hard with this macro pressure, other than it's hard for it to come up. Once it's kind of in a more accepted altcoin, altcoins always get hammered the hardest as you watch like the Bitcoin dominance. Let me see. So we are very heavily towards Bitcoin right now. Bitcoin is dominating the crypto world. Everybody's getting out of these altcoins, and there's going to be a pivot back to them. This will come back to, you know, maybe the middle, maybe pivot more towards altcoins as the utility comes up and infrastructure comes up. And that Clarity Act is going to be what decides it. But as you can see, 24-hour, some people are fighting their way up. But if you look at it this way, there is a lot of cryptos getting dumped today. And on the 7-day, some are down 40% in a week. Solana down 30% in a week. Absolutely tough. So yeah, keep an eye out for the rest of the series in this video. I've already kind of started touching some of the top crypto projects with a little bit of an intro breakdown. So this is going to line up with them. But I figured this is a good time because we are on the heels of getting a true definition of what is to come out of the crypto market, and we will see soon. So let's see if TXC can buck the trend and break out. But yeah, all these guys are getting smoked. So red day, good day to just look back and get some information and see what's going on. One of the biggest things that I always say is uncertainty brings doubt, and when you have doubt, it's hard to put your money in there because you're uncomfortable. So if you have a little bit of comfortability and you get an understanding of not only just markets but crypto markets especially, you'll be more likely to be able to find the quality projects and invest your money wisely and make some money. So look at that little green action. That's kind of cool. So yeah, be on the lookout for the next one. Talk to you guys later. Bye.